So something that I've noticed over the last few years as I've been coaching traders from all over the world is that most traders suffer from the same problems. 3 problems in particular stand out to me. So we're going to address those problems with my Euro USD trade recap today. The first problem that I think holds most traders back from reaching their true potential in this business is that they aren't using a precise entry signal. The second problem that really gets in the way for a lot of people is they don't know where to put their stop loss. Some people aren't even using a stop loss. And the third thing that gets in people's way is that they don't have a process for managing the trades as they work for them or as they work against them. So we're going to use this Euro USD recap as an example of how the ASFX systems could provide you or anybody that's struggling with their trading the precise details that are needed in order to build a business that's going to last long term. The only reason I've been able to consistently survive in the markets, and that's really how I look at it, survival. The only reason I've been able to do that is because I have a system that has a back-tested and provable edge. Otherwise, I would just be another gambler throwing trades around based on wicks and support and resistance and Fibonacci stuff, which in my opinion doesn't really work. You need precise details. One other thing, there's a big difference between having the system and then following the system. So I could give you all the tools. I can teach you in our courses and in my YouTube videos and in my free PDF, all the things that I put out. I can teach you what the system is, but will you follow it is a totally different conversation, especially in this business where we get into trading because we think if we trade, we're going to make money. So then we think we need to trade a lot to make money, which is not the truth. Again, go back to the ASFX saying, do less, do it better, do it bigger. And that's what we're going to focus on today. Let's flip over to TradingView. You can see my entry price is marked basically at 117.42. You can see that right here on the right side of the screen. That price is right at the white line, which is our 200 EMA on the 15-minute chart. So I was trading it down from the 200 EMA towards the 8, which is the yellow EMA, the red 21, and most importantly, trading it towards the blue 50 EMA. So the first thing that you have to remember, if you haven't seen my other trade recaps, is that when I'm trading counter trend, meaning counter the direction of the EMAs towards an EMA, like the 50, that's always going to be a level of resistance. So when I'm looking for risk reward here, which I will show you in a second how I took the position and where exactly that risk comes from, but when I'm looking at it, on the 15-minute, I know that if I'm trading from the 200 down towards these EMAs, it could find a lot of resistance, not just at the 50, but because the 21 and 8 are very close to it. In comparison, if you look back at yesterday, you see how the 8 EMA is falling, 21 is above that. Very clear that this isn't a downtrend yesterday. That's normally what you would want to see when you're looking for a high probability short. But when you're trading towards the EMAs like this and they're in your way, you always want to be taking profits. You never want to be greedy thinking it's going to fall through that EMA and just continue lower. So to get more in detail with where I took the position, we're going to leave this 15-minute chart right here for yesterday, and we're going to switch over to the 1-minute chart. Now on the 1 minute, instead of divergence on the bottom, which would tell us that it could rise, we had divergence on the top. Now, you always call it the direction that the RSI is moving. So this is bearish divergence because the RSI is moving down, bearish, and price is moving higher. Once we were setting in that high, and then it looked like confirming that high at 117.48, knowing that we're at the 15-minute 200 EMA, it's a significant level of resistance, plus we're getting bearish divergence, that's where I go down to this 1-minute time frame to look for the entry signal. I'm normally looking for the D1 somewhere near the 50 EMA once I found my risk point. I know that this high of the divergence structure, it's not the RSI high, it's the price high. I know that if that holds, we're going to make lower highs and see this move down at least to the 1-minute 800, the dark blue line here. That's the same thing, very close to the 15-minute 50. So that's going to be the ideal target. So when I'm reading risk reward here, if you go back to the 15-minute, you can see to get only a 6.5 pip stop here, I knew that if I was going to trade this down to that blue line, that 50 EMA, the 1-minute 800, I could get almost 3R, 2.75 R. And it ends up giving a little bit push, so you do get the 3R. And if you guys know me, you know I love anything over 2R. So then we've got our risk, we've gotten everything lined up. We know that I'm looking for the D1 entry signal, and in the courses, I'll put the links down below so you guys can learn that. I don't want to put that out on YouTube. It's proprietary, but that's where I teach you exactly how to take the position. You now know where the stop loss should go as well. I just explained using the divergence how to create the risk point. Then once you have your risk point, you know how far that is. You should know, okay, if I've got a risk 6.5, I got to get at least 15. a little bit more than 2R, at least 12 or 13, right? We ended up using just a simple risk calculator here to create the 3R if we get that push. And I've done